Gold sees some volatility ahead of this month's FOMC meeting. What clues can investors find in the charts? Joining us today is Carley Garner. She's the co-founder of DeCarley Trading. Carley, good to have you on the show.
Thanks for having me. It's a pleasure to be here.
So I know you've brought us a few charts today, but I'd like to start with the monthly one and just have a quick recap of what we've seen with gold this past month. Carley, how do you see it set up?
Well, obviously, gold struggled the last several months. And in fact, the last couple of years, it really hasn't done much of anything. We've been trading in a range, and within the last week, on news of Chinese weakness, we've gotten quite a bit more selling coming in. In our opinion, though, all is not lost for the gold bugs and the gold bulls. I mean, gold is notorious for rocky rides. It's one of those markets that tend to push the extremes, and once it finally gets to a point where everybody's thinking the market's going to go one direction, it finally shifts around and goes the other way. And I think we're probably getting pretty close to that general consensus at this point. Gold's extremely oversold, and that doesn't necessarily guarantee that things are going to turn around. But in the past, we've seen some patterns that are developing now that suggest that the odds are probably better than most people think as far as prices reversing and heading higher from here.
Well, I'd like to pull up a chart because you do mention it doesn't guarantee a reversal, but it does increase the odds of one. Do you think the gold market is set up for that reversal now?
I think so. I mean, originally, rewinding a week or so ago before we had the gap open lower on Monday, it looked like we had a shot of gold holding about 1120, 1125 area. We obviously have broken below that. We had a lot of stop running. Most of the move occurred in an overnight session. The volume was thin. It doesn't take a lot to push prices while a lot of people are actually sleeping. So it's just one of those things that as a trader you have to be willing to accept, and here we are. And the thing about gold bottoms is it's messy. So we've got support coming in somewhere around the 1080 mark, which thus far has been holding, and I think it's got a pretty good shot at holding there. I can't rule out a quick stop running fiasco that brings us down to 1040. That's possible. I don't think it's going to happen, but it's obviously something that we have to be aware of and play accordingly. But once we finally get all that flush out of the system, I think that we're ready for a rebound.
You look really calm when you talk gold, Carley.
There's nothing calm about gold, but I've been doing this for a long time, and so I've seen the ins and outs of the market. And this is the type of market that it's a little more emotional than some of the others, so it tends to see quite a bit of volatility at times, and I think that's just exactly what we're seeing. Well, people are getting emotional, and it'll end. It'll come to an end. Just
well,
like
on that note, let's pull up the relative strength index for gold. You look at past bottoms and note that gold's RSI rarely dips below 30, but when it does, reversals are likely. At the current RSI level, can we expect a sustainable rally here?
The question in my mind is from what level? And if I knew the answer to that, I guess I'd probably be rich at this point. But I do think that there is a good chance of 1080 holding and prices rebounding. If you look at the RSI in a weekly chart as well as a daily chart, the last handful of times that we've seen these levels, markets have reversed. In fact, if you look at longer term, like let's take a gold weekly chart, going back, I think you'd have to go back probably a decade to get more than 3 or 4 times RSI has been below 30. So, either the chart is lying to us or this could be one of the greatest, opportunities for the bulls we've seen in years.
So, Carley, will you be paying attention to the conclusion of the FOMC?
Absolutely. I mean, that's something that in the short term will move the markets. It always does. The Fed, however, tends to have a somewhat positive effect on gold. We'll see what happens tomorrow and the next day, but I think that the Fed might actually help out the gold market.
Carley, thanks so much for your thoughts today.
Thank you.
And thank you for watching Kitco's Gold Report. We'll see you tomorrow.